Are markets looking for more downside, or are we going to get a bounce into the end of the year, looking for these Santa Claus rallies? Let's jump in and take a look at what's going on. The markets were a little mixed on Friday, opened up a little bit on the news of a potential resolution to the government shutdown. Looked like there was a deal on the table that was announced, and then it ultimately got shut down, no pun intended. By the end of the day, markets reversed a little bit on that news, but also in light of the recent action in the bond market. But right now, the big issue everybody's talking about is, will the government shut down, or are they going to work this out? The government has done this probably 20 times over the last 50 years. The last time was in 2018, 2019. So let's jump in and take a look at what happened during that time frame. This is the Dow Jones, got the daily moving averages on it. And this was the government shutdown the last time, 2018, 2019, when that happened. It was somewhere around December of 2019, I believe it was, when the government shut down. Oh, it's up here, 2018, 2019, when the government shut down. So it looks like maybe there was a reaction, but this was also when the Fed was trying to do QT the last time and raising rates. The markets threw a fit because the credit markets were freezing up, and this was the big taper tantrum. When the Fed tried to taper their balance sheet, do QT like they're doing now, the market just completely threw a fit. The Fed pivoted because credit markets froze up. We did not have inflation as a problem back then, so they were able to do that. This time around, inflation is the big problem. And as you can see, the Dow Jones has rejected on the 200-day moving average. It is, kind of did the same thing back in here in early March, where it kind of played with the 200-day moving average, found support, went on the rally that we've seen recently over the last few months, now rejecting again. So the real question is, are we looking for more downside from here, or could we get a bounce? A lot of times, September is a down month for the markets and for Bitcoin. And what you could potentially see is that the markets obviously want to rally. You've got retail investors buying the dip. You've got a lot of buy the dip activity going on here. That's what happened over here whenever it loses the 200-day moving average. The NASDAQ is still well above, but wrestling with the 100-day moving average, S&P below the 100-day, but wrestling with that 618 Fibonacci retracement just above the 200-day moving average. And if we look at October, November, December of last year, you can see September was a big down month last year, had a little bit of a bounce going into the first part of October, and then it was, a lot of volatility, but basically uphill most of October, November, December into the end of the year, had a little bit of a sell-off towards the end of December. You can get some tax loss selling and things like that. A lot of rebalancing goes on in December with money managers, a lot of tax loss selling. So it can be volatile, but generally you get that Santa Claus rally with investment funds, hedge fund managers looking to get their bonus. And then, of course, we were off to the races after that into February, a little drop in March, and then back into this rally in August, whereas that was where things stalled out. Pretty much the last time, August was the month where markets reversed, had the peak here in August, markets reversing. The low came in October, middle of October, so we're not quite there yet. So you could potentially see a little bit more downside on the NASDAQ, S&P, and Dow Jones through October. A lot of times that's what will happen. Then you can get a little bounce into the end of the year. So there's two schools of thought. One is we're going to continue to see more downside, put in a new lower low, maybe even retest some of these previous lows that were put in back here in March and in December. Ultimately, last October was the low for the market for this cycle so far, and continue the bottoming process. So there is, one school of thought that the markets are going to continue to seek a bottom, maybe come back and test some of these lower lows that were put in earlier in the year. The other school of thought is we're going to get a bounce from here into the end of the year and put in new all-time highs. There are a lot of headwinds in the markets out there right now, potentially for that to happen. One, obviously, has been the bond market. The VIX, let's take the moving average off here. The VIX has not spiked anywhere near what you would need for a bottoming in the market like we saw back in March. So we got a little work to do there. The Dixie kind of bouncing around, reversing off of a little bit of a pullback the other day on that 105 level. The 2-year pulling back again from a drop back to about 5%. The 10-year is the big one that's really been weighing on the markets, putting in somewhat of a topping tail here, but did recover. It had pulled back down to 4.508. recovered back up to 4.586. A lot of people are looking for the potential of a 5.25% interest rate, retesting on the 10-year, retesting these 2006, 2007 levels right before the GFC. And that's the thing, is a lot of these levels are getting back to what we saw in 2008, 2009. So that's spooking a lot of analysts and a lot of fund managers. Let's take a look at Bitcoin here. I've got the Fibonacci retracement on Bitcoin. This is on the weekly chart. Still kind of from the low back in November 2022 to the high up here in July. I've got these Fibonacci retracement levels and basically been wrestling with this 236 and the 382 range, mostly, jumping up obviously here and there, identical price action. The question is, where is Bitcoin going to go from here? So let's take a look at it on the daily, and let's put the moving averages on Bitcoin for the daily. Got a lot of noise going on there. Let's jump to a cleaner chart. So right now below the 100, 200, have that 100, 200 death cross coming. Potentially had the 50 and 200 death cross already happened. The 100, 200 is a little different. And we know with death crosses that's lagging indicators. Price has already dumped right in this area, creating this death cross. Had a little rebound here, finding support on the 50-day, but still below the 100 and the 200. The last time we saw the 100 cross down below the 200 was right in this area here in February of 2022, led to a lot of big downside. Doesn't mean that's what's happening or going to happen. A lot of times that's what happens already in advance of price movement. So what are the likelihoods? You have this $25,000 level, most likely a retest of that. If that breaks, you've got the $20,000 level to see, and Bitcoin can hold up there. We have this trend line connecting the pandemic low to that November low right here of 2022, creating a trend line. Depending on what price does and where this line converges, it could meet around the $21,000 level for a check of the macro trend. If we put this on a weekly, the big 200-week moving average has been providing resistance, which is never a good thing. You want Bitcoin to be above that 200-week moving average. Anytime it can't stay above the 200-week moving average, a lot of times that leads to more downside, although last time it did pop up and play with it again and pop up. So it's just been kind of wrestling in this range, which, Bitcoin could definitely continue to do in the near term. The other thing that I put on this is the Bitcoin halvings. All right, let's put the Bitcoin halving cycle on here. On this chart, we put the Bitcoin halving cycle in. Let's take a look at that on the weekly, because price can, a lot of times we'll do the same thing going into the halvings, right? So you'll see where this was the pandemic, where price kind of really sold off, bounced into the halving, kind of consolidated, then took off to the races. This was a Fed-induced, trillions of dollars of liquidity pumped into the market move. But back here, this was just normal, financial easing cycle where zero interest rates. Let's take a look at this on the daily. Back at the last halving, before the 2017 top, and look at what price did. Price kind of came off of that low consolidation, kind of went up right before the halving, dropped into the halving. It dropped after the halving and then went on to run after that. Now, this was in monetary easing. This was in, Fed QE cycle. This was in zero interest rate environment, after that 2009 cycle, but nowhere near the liquidity injection that we've seen over the last couple of years. And right now, the halving is estimated to happen on about the 25th of April, somewhere around there, 2024. So basically, you've got about 6 months to that halving, plus or minus. Let's see how many days that is to the halving. About 200 days, plus or minus, somewhere in that range. So generally, what could be expected is price could consolidate back down, check that $20,000 level, plus or minus, into the halving, kind of consolidate a little bit afterwards and take off and run after that. That generally is what happens with the halving cycles. Will it happen this time? I think a lot of it is going to depend on the overall macroeconomic environment and what's going on in terms of the bond markets, the stock markets. Bitcoin is a risk asset. It trades like a risk asset. Right now, from a liquidity standpoint, liquidity meaning not liquidity of the asset itself, but liquidity of funds in the market. This is a risk asset. So right now we're in a risk-off environment. Bitcoin's been kind of hanging on, even though the markets have been pairing off a little bit. but a lot of times Bitcoin will lag the markets. So we could be looking for some downside in Bitcoin next week. The markets could recover from an oversold bounce here. They tried to recover on Friday. We're not able to do it. So we could see a little bit of consolidation here before maybe a retest of these lows if you get that VIX event like we talked about. And then maybe try to put the bottom in and see how the economy plays out. Because the big issue is with the Fed, we're in a new paradigm. We're in a new rate environment, a new rate regime. We're higher for longer, much longer than the markets anticipated, back to the new norm or the old norm, which is interest rates about at the level where we're at now, mortgage rates at about the level where they normally are, 5 to 7%, 5 to 8% on mortgages, 5%, 3 to 5% on Fed funds. So that zero interest rate environment, we've seen tons of QE entering the market. That is what Powell has put his life's work into, ending that Fed put, backstopping of the markets. He wants to get more back to a more normal rate environment, more normal asset valuation environment based on that. Of course, they don't talk about that, but there's not a whole lot they can do in the event of a credit crunch, except for special situations like they did for the banks when the banks were having liquidity issues, balance sheet issues, and we saw a couple of bank failures. So they do have some tools to deal with potential credit events, credit environment, but not QE in the traditional sense because of inflation, and not zero interest rates definitely because of inflation. So the housing market continues to be broken even as rates continue to rise. Prices are going up, inventory levels are staying down. The higher the rates go, the more pressure that puts on inventory levels. People do not want to sell their houses and contemplate a purchase at these higher rates, or even rent. It's hard to go from renting, go from owning to renting for a lot of people. They just aren't, able to do that. So it'll be really interesting to see how things play out into the end of the year. The bond markets are under pressure. The Treasury needs to issue to cover debt. So we'll see if the buyers continue to come to the market at these rate levels, or if the Fed has to start talking about monetizing the debt. So very interesting times ahead. And these are the things I'm looking at. I'll see you in the next video.